I am mining investor and editor of Resource Stock Digest. Head out of the Del Real here with my partner, colleague, friend, man that wears many hats, Mr. Nick Hodge, who, of course, is also an investor and the publisher of Daily Profit Cycle. This is the 306th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk stocks. We're going to talk about gold visas. We're going to talk about the mathematics, not mathematicking. But before we get to that, how are you, Mr. Hodge? How goes it, sir?
I almost wore a hat today, Gerardo, but I decided to jump in the shower real quick. It's getting warm. I think we had 10 inches of snow on the ground a week ago. The sun is blasting through my window. It's 60 degrees. I'm going fishing this weekend. The bees are starting to buzz, and our chickens are laying a bunch of eggs, so we're rich. How are you?
Look at that. Look at that. And then listen, you're fortunate to be rich, right? Because if you're not rich, you're starting to learn whether you're a Republican, a Democrat, a Libertarian, whatever you are. This policy of this administration very much caters to the yous and eyes of the world, Mr. Hodge, regardless of party affiliation or ethnicity or any of the sorts. And regardless of party affiliations or ethnicity or anything of the sorts, you're not rich. It doesn't look like you're a part of, pun intended, the master plan for the next 4 years. And so, listen, I was very open-minded about DOGE, and I was very open-minded about the administration coming in and the pro-business attitude and less regulation. And I love all of that, right? I am a fan of less regulation, more efficient government, less government, smaller government. I am a fan of fixing immigration. And I'm definitely a fan of, the concept of DOGE, right? Going in there and finding waste and finding fraud and cutting that and doing so in a way that's precise and targeted. However, I got to say the past week has been a big disappointment on many fronts. The math ain't mathematicking, right? The math ain't mathing. And so when I hear initially, and I applauded this, Mr. Trump and the DOGE guys and gals come in and say, we're going to find up to $2 trillion in fraud and waste, and we're going to cut it. So, okay, well, hopefully they take a scalpel and not a chainsaw. Of course, Elon wants to put pictures of him and a chainsaw up there. Literal chainsaw, right?
It's Malay's thing, of course. Yeah.
Right. And it's cool if you want to be cute and put pictures and whatever like that. That's not consequential to my life. What is consequential to my life is when you're just, you're asking for 3 million email responses, and clearly you're not going to read them all. So you probably have an algorithm that's going to decide who's getting fired. And again, these are real people's lives, right? On all sides of the political spectrum. When you then tell me that you're probably not going to find $2 trillion in waste, and you're also going to introduce a bill, this administration, the Republicans, are moving along and advancing a bill that not only does it cut the deficit, it actually adds $4 trillion to it. So if you're going to find $2 trillion in waste, and you're already telling me you're likely not going to be able to do that, and you want us to eat $4 trillion more to the deficit, and then you want to tell me that the only way that we're able to do this as a country, the only way, is if Gerardo and Nick, right, top 1% people here, and not 0.01, but luckily we're doing all right. We're fortunate in that sense. When you tell me that the only way that that can happen is by taking money from Medicaid and Medicare and Social Security and all these other programs that are meant to be safety nets, I am for getting rid of the fraud and the waste in every single department, including those. But don't tell me that 2 minus 4 is 6. You know what I mean? Like it just, the math ain't mathing. So I wanted to start there because it's been a busy week policy-wise, policy that's very consequential, and policy that affects the markets and the markets that we dabble in.
I mean, I feel like I'm going to give you a bunch of broken record stuff. No shit, Trump's going to run up the deficit. He did it the last time. I wrote a newsletter about it in January. The CBO, the Congressional Budget Office, projected him to run up the deficit. The Committee for Responsible Budgets projected him to run up the deficit. It's what he did last time. You can't, offer tax cuts and expect to not shrink the deficit, right? So, or expect to shrink the deficit, I should say. So that's what you're saying. The math ain't mathin'. I mean, it was pretty clear to me. It was clear to us in October, Gerardo. We made a presentation at the New Orleans Investment Conference that's when DOGE first came on the scene, right? And we had the DOGE logo out and things like that. And we were saying then, like, all for it, right? Go and find your 2 trillion, but
Oh
likely
yeah,
not going to happen for lots of reasons. I'm from the government and I'm here to help. Well, I'm from Doge and I'm here to help the government. It just seems like, when you get into these bureaucracies, especially in the United States, which has been going for so long, which has been running up these debts for so long. Chris Curl, who's an editor with us, has been writing about these topics. He was writing about the Treasury being pillaged last week, and this week he was continuing to write about the fraud and the waste. The Department of Defense spent $1 billion to audit their budget, and they couldn't account for 63% of their waste, things like that. So it's so rampant and so big that it's going to take a while to go through. And like I've been saying, which is why I feel like a broken record, the market doesn't know how to take it because it doesn't know how it's going to play out. There's other factors which we can talk about, growth and inflation, et cetera.
sure.
But again, like I've been saying for weeks, half these things are getting challenged in court immediately, so you don't know what is going through. The other half are getting extended, or there's carve outs where you can, even if he slaps tariffs on something, you can apply for an exemption. So it's literally, we're in the thick of things, and you can see that in the market. Look, the VIX is over 20. There's consternation out there. People are buying puts, people are buying protection, and so I honestly haven't been paying as close attention as you. I muted Mr. Musk on Twitter 2 months ago. I couldn't take it anymore. So it doesn't. You say it affects your life, but I'm not sure. It really does. You're not on Medicare. You're not on Medicaid. You probably don't expect Social Security. I don't. I don't send my kids
But
to
the
public
deficit
school.
does. The
What's
deficit
that?
the deficit most definitely will affect me as a taxpaying citizen, right? Because I know if
Oh
I don't pay
yeah.
for it
Well,
now, I got to pay for it later.
Well, how do you pay for it? I mean, how do you pay for it? So, we'll profit from it is the way I think about it,
Sure.
because we were talking about it last week. They're going to have to cut rates. They're going to cut our taxes. We already said that this podcast, right? So,
Yep.
the market's not pricing in greater than 50% chance of a rate cut. You were talking about QE coming back last
Yep.
week. Sure, run up the deficit and then cut rates and watch what gold does. We'll see.
Yep. And,
We'll
and,
be
and
all
that, that's
right.
a, that, hey, that's a great segue, right? That's a great segue. Gold is at 28.72, finally stopping to breathe for a little bit. It's down some 3%, I think, if I'm not mistaken, here in the past week or so. I look at it as a really, really healthy consolidation slash correction. It's coincided. We finally got some of the correlation back with a dollar index that was up nearly 1% today. It broke the 106 level a couple of weeks ago. It's back above the 107.26 level pretty convincingly and looking like it wants to surge a little bit higher. So it'll be interesting to see where gold finds its support. I suspect it's somewhere around these levels. Could we see another $50 to $60 drop in the gold price? Absolutely. You're the technician amongst us, so I'll leave the technical
I mean,
analysis part to you. But your thoughts on gold? Still bullish?
oh, absolutely. I mean, I made a gold
Yep.
recommendation today. You were telling me
Yep.
about the write-up you read just before we started recording, and I think the subject line of that Hodge Family Office issue was a royal gold buying opportunity, right? So here, let's slap up the chart and see if I can do it. I haven't done it in a couple of weeks. There it is. Let's go out to a year. It's been climbing up here, falling here. If it doesn't catch itself here at 25 or 28.55, then it's got a little bit further to go. As you say, you just come down to the next support here, just right around 27.88. I don't think that happens. I haven't looked at the gold volatility, but given what's going on out there in the world, and let me stop sharing, I guess, because there's not much more to do with this chart. But I think it catches itself here. So I put out that recommendation, like you said. I think gold is one of the places that capital is flocking to, as large money, institutional money, is sort of waiting to see where the chips fall, with the Doge, with the tariffs, with the dollar, with the rates, etc. I think it's the end of the month. So we're recording this on the 27th.
Yep.
The month will end tomorrow. The free podcast the version of it will be out next week. But that's significant in and of itself in market terms. Things get reset at the end of the month. You head into the last month of the quarter. We'll then start getting, February inflation numbers, growth numbers, et cetera. And the market's going to change, right? We've been talking about this changing market dynamic. I've sort of been wanting to buy things, but haven't quite decided what to buy just because of the uncertainty, again, as reflected in that VIX above 20. So, giving you a bit of word salad there, but all that confusion that I've been talking about, the entire foundational profits issue theme for January was the market confusion, right? Until this confusion subsides, or the market progresses past it, i.e. we get into the second quarter and we digest first quarter numbers and get a real good look at what the actual implications are of what's going on inside the Beltway in DC, then I think gold is the default safe haven and the default place to park capital outside of, highly liquid, short-term funds, things like that.
Yeah, no, I agree 100% on all that. I want to, but one last comment on the Doge thing. The one thing I really like about it is they basically, there's a website, they created a website where they're line iteming every single item that they're either, cutting, slashing, undoing, or leaving untouched. And I do like the transparency aspect of that. It's allowed several people to catch mistakes that were made. And Musk was at least transparent and said, look, we're going to make mistakes, right? We cut Ebola prevention last week accidentally. Oops, my bad. Like, let's get Ebola prevention back on the list of things that we don't want to cut. And so at least there's some mental flexibility there. It doesn't seem as rigid, although clearly it's being used, as a tool to weed out the people that they don't like and the groups and the agencies they don't like.
Well, for sure, there's a little bit of politicization to it, but I'll comment on that in a second. First, I wanted to say, I'm not empathetic, right? I understand that the humans are losing their jobs and they have families and bills to pay, and at the same time, fuck the government. Like, cut it all to the bone, right?
Yeah.
It's been so bad for so long.
Yep.
Like, cut it all the way down and start anew. Like, burn it the fuck down. That's what Ben Hunt says, right?
Yep.
Burn it the fuck down. Like, I really don't care, Gerardo. So, like, let's cut it to the bone, and then we'll see where the chips fall, and we can rebuild it, because it's been so bad with the handouts and the payola and the waste and the fraud that it might be tough to go in with the scalpel. So maybe cut the tree down and then go in with your smaller chainsaw. Take in your your 20 or 24-inch bar chainsaw, and then once you fell it, go in with your little 18-inch steel and take off the branches, right? So that's the first thing. I honestly don't care. That's why I muted him. I'm not paying attention to the people who are waving their arms about these 20-year-old engineers going into USAID or whatever department. Like, I don't care. Cut it. I don't care.
Yeah.
So that's the first thing. The second thing is, people that voted for Trump are starting to get cuts. And you were saying, it's being politicized against people they don't like. But people who voted for Trump are now losing their jobs. I've been reading stories about, right? Like plant workers, some factory workers. I was reading something about dam operators here in Grand Coulee, which is the first or second biggest dam in the country, losing their jobs. These are Trump supporters, right? I saw Steven Ranella, who is the meat eater, super popular podcast guy. He was posting this week about, cuts to forest agencies and things that are near and dear to him, right? Management of the wildlife and stewards of the forest and things like that. And he admitted that he was a Trump voter. And so they're starting to see, they're getting a taste of their own medicine, right? Which I also don't care. So I didn't vote. So look, cut it all down, man, and let people bitch. That's what people do. Stay independent, and you won't be so politicized and psychological about it.
Yeah, I do wish there was a more educated approach. I fully am on board with cuts where and the amount of waste that's there. I've long said, most of our big major institutions that are supposed to earn our trust, have failed us miserably. So I am all for redoing every single major institution. I just think this is probably one of the least effective ways to do it, because you're not really getting that, right? We're not getting those level of cuts. So we're not going to achieve that the way that they're doing it. And so if that's not the change that's going to happen as a result of this effort, then again, 2 trillion in cuts, 4.5 trillion in tax cuts, mostly for the wealthy at the expense of, the lower and income and middle class. It just, it doesn't sit well with my moral compass, I guess. And it's expected, unfortunately, right? But I look at models like Argentina. I said when the election was over that one of the first people Trump and Elon met with was our Argentinian president, right? And he's done a brilliant job in Argentina doing exactly what you said. He went in there and cut 90% of the government programs that were there. And he said, I don't like any of this shit. We're going to go ahead and rebuild it. And no, we're hiring now, but everybody's fired first. Now we'll hire back the best and the brightest. I don't mind that at all, but I feel like we're getting neither. Right? I feel like we're adding to the deficit. Cool. I get my corporate tax cut. Cool. I get my capital gains tax cut. Thank you. Right? I knew that was coming regardless of who was in office. I get less red tape. I'm a mining investor at the end of the day. So all of that benefits me individually. I just think there's a bigger price to pay in the long run if we're not going to get our American house together. Right? And unfortunately, I don't think this does any of that. But hey, if you got $5 million, There, you don't have to worry about an immigration system that's broken either. You could just buy a gold visa, baby.
Sell
If
them.
if that's not a sign of the times, I don't know what is, y'all. And I don't care if it's Republican or Libertarian or Democrats. If you can't see that, you may want to rethink the way that you absorb information out there in the world, because it most definitely is turning into one of those gilded age type of time periods in American history, and that is the trend that is going to continue. Back to your point and back to the markets, our job here is to mitigate risk, find opportunities, find trends that we can position ourselves and our family and our friends and the people that subscribe to our services. And hopefully we can make you some money along the way, because fourth turnings are by their very nature volatile. And there's a lot of unexpected that comes with that volatility, right?
I just love that it's all gold. We're in a golden age. You can get your golden Visa. When you buy a Bitcoin, it's a gold coin logo. Like that tickles me. It tickles me pink. It tickles me pink, as they say.
Let's get back to the markets. We had a jobs report that was what I've been saying, that I think we're close, or if not in a technical recession, but definitely we have a labor situation
Slowing.
that's definitely slowing, right? Higher unemployment than we anticipated. I said last week it started to look and feel like an stagflation to me. That's when inflation goes higher, but growth slows down and unemployment goes higher, and you get the worst of both worlds. Less people employed, more people dependent on social programs that are being cut, and at the same time, inflation, meaning the price of everything, keeps going higher. Bad combination for the American economy, and bad for the globe if we believe that trend continues. Again, I think they come in and then they do QE. I think they, you know, uh, it's been rigged for a long time. I think they'll find a way to rig it and kick the can down the road a little bit longer. But there's definitely a lot of unraveling in the market, a lot of unpredictability, as you highlighted earlier.
It's been going back and forth. So you call out stagflation, and then that's been a quasi appropriate term. The thing is that things are changing fast. Like, you'll probably see when the February number comes out that inflation actually ticks down, and that's one of the reasons, because it was a 3%, the most recent print we got, and you'll probably see it with a two handle for February, and that's one of the reasons the market can't figure things out, is because we're hearing about the eggs, we're hearing about the coffee, oil prices have started to go back up, but that's only been here in the past couple of weeks. Before that, oil prices were going down for a couple of weeks before that, after going up in December and January. So it's been going like this. The commodity prices, the inputs that go into the CPI, and that's going to make the CPI number go like this. And that's not what you're talking about, but that's what's changing so quickly that the market can't figure out. So yes, to your point, growth is slowing. We had 3% growth last year
Sure.
in the U.S. You likely won't see a three handle this year. You'll likely see high twos, stepping down, not going to flat or negative, so no fear of a recession, but definitely a slowing down. And I listen to Hedgeye and Keith McCullough a lot of this. What he's been preaching for years is the rate of change, right?
Yep.
It's not necessarily ultimately, is it going to be a recession? Well, it doesn't have to be a recession. It just needs to the rate of change of growth to slow or increase, whatever it is. In this case, it's slowing, and that's what the market has to digest. So I think once we get into May, or excuse me, March, the market's going to realize that we're not going to have a recession. It'll see that lower inflation number. And I think we'll get back to record highs in the S&P in a couple of weeks here, as long as the bottom doesn't fall out, right? And that's what I'm kind of nervous about. Not a recession, the bottom falling out, the bottom falling out of the market. I was saying this, I don't know if it was on last week's podcast or one of my issues, that there's gaps in charts. You know about gaps in charts. Everything gapped up when Trump got elected in November. S&P gapped up. Lots of S&P sectors gapped up. And if you look at the charts now, which I obviously do, eh, they're coming down to a point now where they're just above that gap up, right? So to me, it's a little bit scary on the chart, because for me, gaps get filled, right? Even if they take a while. And so could there be a day, a week, 2 weeks where, we get a bunch of down days, the VIX goes up to 30 or 40, the S&P closes that gap that emerged in November, and then we go back up? Absolutely. I mean, absolutely, we could see that. Am I calling for it? No, because I'm just taking the market as it's coming every day. Like, I started writing an alert the other day. We were having a big down day, and a big down day has to go in quotes, right? Because we're only like 2.5% off the all-time highs.
Yeah,
Of
yeah,
the
yeah, yeah. Everybody's freaking out, right? I'm like, but that's what people are accustomed now.
Exactly right. So, and I started writing something up I was going to buy. Like I was looking at Freeport and I was looking at some REITs because rates have been coming down. And then, again, back to that VIX, I just look at it sitting there at 20 and it just doesn't want to come back down yet. And to me, when that VIX is elevated, I've told you this before, that's when prices can swing wider than when the VIX is lower. And so I'm content to wait. That was a long rambling answer, but I think that's par for how people are viewing this market and how the market is. It's not bifurcated is not the word. Schizophrenic is the word. I mean,
Yep.
correlations have broken down once again, and I think we
Yep.
just got to get into March.
You mentioned Freeport. That's a great excuse for me to segue into copper, right? We've seen the Trump administration launch an investigation into copper imports, and China didn't like it. China's asking for that investigation to be halted. Interesting to me that they're not protesting tariffs, which is where this would lead if the investigation turns up that that market is being manipulated, like many of us believe it to be so by specifically China, right? But the spot and the futures market for the copper price jumped on that news. And look, this is a part of a trend. I've said that we are in a cold war with China, and that natural resources were going to be really, really impacted, and that policy for this administration as it relates to tariffs and the banning of exports from China into the U.S. and vice versa, it is going to affect prices of the commodity, obviously. But companies that are leveraged and can provide and fill in, back to your point about gaps, fill in the gap when it comes to potential supply. And I think more importantly, long term, it highlights the need to establish independent critical metal supply chains. We've long said that. We've talked about this, I don't know, since 2016 at the very least publicly. We've made a lot of money getting ahead of that trend and picking some good names that have benefited from that trend. But this isn't a 1 or 2 year trend. This has been going on for quite some time. It's just accelerating now, right?
I think so. Look at this copper chart here. So
Yeah.
this is how I've been watching copper. I had this wedge drawn on here. I've had this on here for a couple of weeks just for myself because it was either going to wedge down and then break down, or it was going to wedge down and then break up. And you can see which way it broke on this chart. This is what you're talking about here. This is the China stuff. You had copper prices get all the way up here above 480, and they've clearly broken their downtrend here now, right?
Yep.
So, oh shit, I got to draw on my other screen. If you just look at this as like a trend, if this was the trend, right? I mean, you could do the top of the wicket candles, or you can bring it down to the base of the candles, either sort of way, right?
Yeah.
But either way, the downtrend is broken, right? Like this downtrend in copper has been broken, and it's looking good. And at the same time, the Freeports of the world, the Rios of the world, they're at 52-week lows, and in some cases yielding 5-6%, right? So very interestingly watching those things. And if you remember, like I do only sometimes, I was telling you that there would be a wonderful window in early 2025 to buy copper stocks ahead of a good run in copper later in the year. And I think this is getting really close to that window. If you'll indulge me just for one more second, I'll show you the gap and maybe the S&P that I was just talking about, and we can put the charts to bed for a second. Yeah, look here, man. When Trump got elected, this thing gapped up. And
Yep.
it wants to come back down here and retest this. It
Yep.
technically already kind of filled a little bit, but you see where we are here
Hmm.
on this top of this bar? Like it wants to come back down here and kiss these lines, right? And
Yep.
so
Yep.
that's why until it does that and we get confirmation of the uptrend going back up, this is a falling knife, as it were, and you learn early in your career not to try and catch those.
Yes, sir. Yes, sir. I've been there, done that several times.
Mm.
So bullish on gold, bullish on silver. I'm imagining, and then waiting to see if trend lines are broken or not on the copper side, right?
Yeah, we're waiting to see if the bottom falls out of the market. If the S&P holds up, I think I'll buy another copper stock, a big
Excellent.
copper stock next week. Yeah.
We got to talk Bitcoin. I'm not a Bitcoin guy, but I bet I did have our in-house expert, over at my house a few weeks ago, walking me through the steps in the process on what it would look like, right? And how to purchase Bitcoin and what a wallet is and all of that. And that was fantastic. And we'll be bringing that to you here shortly. But I gotta say, even to a novice like myself, when I see the price volatility being what it is, it looks like another buy the dip moment. I don't know if this is where you buy the dip. Chris Curl would be better equipped to answer that question, and happy, obviously, to ask them the question when y'all write in and want an answer. But any thoughts on your end of it on Bitcoin and kind of where it's at? I know you and him communicate quite frequently, and you, of course, own some Bitcoin. So
I'm a Bitcoin owner, both. Again, broken record, the same way I own gold, right? I have in the safe with the gold and the
the
bullets,
bullets,
as you always say, and then I have it in my my portfolio in the form of, gosh, I think I ones now. I think I own the Franklin Bitcoin ETF.
hmm,
And I think there's another one, Easy BC, I own. So yeah, I feel like you're inside my head, because as I was writing that alert the other day, I was going to buy both Freeport and a Bitcoin fund, and I decided not to do both, just waiting for this volatility to come down a little bit. But
yep.
do think it's a good buying opportunity for Bitcoin, and I will be adding it to the foundational profits portfolio, I think, in the coming weeks here. So Bitcoin is long-term bullish. It's obviously a risk asset, and so as we've gotten this tumult in the broader markets over the past couple of days, it's one of the things that gets sold down. Um, and that's sort of that. Look, it was $106,000 just a couple of weeks ago. It's down to, I think, touched 82,000.
Yeah.
Chart says it could go to the high 70s, but not much lower than that. And so it's the same answer as copper. As long as we get to the end of this month, as long as the VIX goes back down below 20, I think these copper stocks and the Bitcoin are going to come back up for sure. And as we get to that next part of the cycle, right? I put cycle changing on the thing, to
Yep.
your point about stagflation and things, right? The market has just got to get into March, get these February numbers, and realize that we're not going to Hades in a handbasket.
Well, listen, March, I'm going to talk our own book here, and I'm going to talk digest publishing and the many services that we offer, right? We've been busy, folks. And those of you that are subscribers of us know that, just in the last couple of days, Nick's written up 2 different companies. We had a webinar here about 3 or 4 weeks ago where we promised you 3 new deals. Those are early stage deals with really, really top notch management teams. Nick just recommended a royalty company earlier today. So I say all that to say that March is going to be a very, very consequential and exciting month that's going to really set the pace, I think, for the rest of the year in a lot of ways. And there's a lot of core picks in my personal portfolio and the portfolio with the various services that I write and manage, where the catalysts that we've been positioning for, that we've been getting ready for, are now ready in place, and it's go time, right? And so we have companies, multiple companies, that are drilling. I'll save that for the premium portion of this podcast, but multiple companies that are drilling projects for the very first time. Companies that can go from $1 to $5 within a month or two, right? And nothing excites me like that. Companies that can go from 20 cents to $2. And I got that one queued up, and I think I'll finally be able to talk about that one in the next couple of weeks. And I'll be bringing that to subscribers, of course, of one of these services. So I say all that to say, if you haven't signed up to the private placement service where we've been busy and finding some damn good deals, or Nick's services, or my services, or Mr. Chris Curl services, this temporary lull in price action, whether it's in the copper equities or the uranium equities, or with the slight pullback in gold, the gold equities, is a buy the dip opportunity if, like Mr. Hodge says, the bottom doesn't fall out of the overall markets, right? And we'll know that here in the next week or two, I suspect. And so, I think we're at an inflection point here, for a lot of the names that are in the portfolio and that we own large positions in personally, right?
Oh, absolutely. Gosh, we've been pounding the table on it, and I'm just going to continue doing it
Yep.
because the deals have been so good, and they continue to come. So we had that webinar about private placement intel. We said we would have 3 deals. The first 2 are actually already out, but let me just go in order. The first one, we're raising money for a company drilling 2 copper gold projects in BC. The financing's being done at 42 cents. I haven't had a lot of time, but I peeked earlier today, and shares of that company were trading over 70 cents. So we're buying shares at 42 cents privately in a private placement directly from the company. That comes with a half warrant to buy more. While they're trading above 70 cents in the market. So do the math on what you're immediately up on that. The second one, you mentioned companies that were going to drill projects for the first time. I know which ones you're talking about. One of them includes the second private placement we did this week about Finland. And I wanted just going to talk about Finland for a second, if you don't mind, and maybe you can chime in. So There's a big mine there. The biggest mine in Europe is there. It's Agnico Eagle's Kittilä mine. Produces 220,000 ounces a year of gold from a greenstone belt there.
I call it here
Um,
kitty kitty, by the way.
that's funny. Yeah, I don't have a good Scandinavian accent, that's for sure. Um, and there's been other deals that have done really well, some of which we've been involved in. So it's called the Central Lapland Greenstone Belt, and there's another company there called Rupert that just put out a feasibility study, I believe, last week or last month, showing robust economics. People routinely cited as one of the most robust undeveloped gold projects in the world. This is a company we financed at 85 cents in 2019, and it went to $6 in 2020, right? As it outlined, it's a Ikari deposit there. So we made 6 times our money, and I wrote a check into that. We made 6 times our money in a year. In Rupert Resources. And so Finland is open for business, and it's sort of a quiet boom is what I call it, because you don't see people like waving their arms about Finland a lot, even though there's been quality deals there. Dave Lotan, who's a well-known name in the junior mining space, has Orion Resources, AU Ryan, R Ryan, which was a really popular story a couple of years ago with the gold boulders that they had found in Finland, and that project company will likely get sold here in the not too distant future. And so Finland has come on real strong. You've had success there with Mawson. I don't know if you want to talk about that at all or not.
Yeah, no, look, I think I don't want to get too specific with the different companies, but I will
Yep,
say this: the geological endowment of the region and that specific belt is vast, right? And the scale potential is really, really, really underexplored relative to the attention that that belt gets. Now, it hasn't been lost on the majors. There's several
that's right.
majors in the region. So the majors are keen to be in those areas and are keen to have seats at the table. And so what Nick and I, really have been trying to do is find ways to position our subscribers, our readers, and ourselves at that table, right? If it's good for the majors, it's good for Nick, it's good for myself, and it's probably good for subscribers if we can find early stage deals where the market caps are relatively low, the management teams are very experienced, know how to operate in the area, and have past success with the types of deposits they're hoping to discover. Those are the boxes, along with share structure, that we all check for our subscribers and for ourselves before we recommend any deal. And I gotta say, Finland has that in spades right now, right? A lot of companies doing a lot of good work. I won't mention the company, but another company just came out with results here earlier with 15.35 meters of 3.43 grams per ton gold, 2.75 meters of nearly 13 grams per ton gold. And so, look, a lot of these bulk tonnage, high grade targets have 2, 3, 4, 5 kilometer strike lengths with significant grade. And again, no accident the majors are there, and no accident that we've been on the conference circuit, taking meetings, making calls, talking to people behind the scenes, finding deals in the region that are early stage. And, the first one is out, and I suspect we'll have, another one or two up our sleeve here in the not too distant future.
That's it. So you said it exactly right. We found a company, not even public yet. We're participating in the go public round. Very clean share structure. Will be listed in Q2 on the TSXV. No warrants outstanding. Has acquired several projects in that central that greenstone belt. Some of which adjoin that Kittilä mine, that Kittilä land package that Agnico has. They've done trenching. They've done grab samples. Some of which as high as 95 grams per ton gold.
Yep.
And they'll drill in Q3. They're raising money to do that as part of their go public round, and they'll put that money in the ground at their first, most prospective or flagship project in the fall. So that's really exciting. So that was the second deal, and the third one will likely materialize next week. All that to say, and the readers have been responding as well. So
They
the
have.
response to that webinar has been great. Several new members have come in. Several new members have written checks into deals, and I won't tell you the total, but we're raising significant chunks of capital at
Oh,
this
yeah.
point. People writing checks alongside us into these deals, so that's great. Of course, we'll put the a link to the webinar back up. We'll keep it open. We're discounting it by more than half. It's $5,000 a year typically for private placement intel. We're selling it for 2025 to reflect the year. And that's
And
it.
guaranteeing you a double in
That's
a
it.
year. And if not, you get a free subscription.
That's
Get your
it.
money back.
That's
As
it.
good as that gets. I don't know. I don't know if there's a better deal out in the space right now, given the quality of the deals, right?
Yeah, so check out the webinar or give Jimmy a call. He spent a lot of time on the phone. And I guess last thing I'll say before I kick it to death is it is a little different. So you got to fill out certain forms and have a broker, and we're coaching you through all that. So I think I said this last week, but we've got video tutorials up there. I'm making a new one. Like when I fill out my sub docs for this most recent deal we're doing, I'm going to do a screen grab video, and you can just watch me fill in the sub docs so you don't have any questions. People had questions about sending a foreign wire. I think I said that last week. I'm just going to do it. Like, I'll give you all the tools you need, man. I'm trying to reduce all the barriers to entry, man. If you can't send a foreign wire, I will record myself sending a foreign wire and send it to you so you can figure out how to do it. That's what we do. And we want people to have success in this way. I mean, we've been preaching private placements for a long time now, and it's how we've made the bulk of our profits in the market, I'm pretty sure. So just check it out. Like I say, it's a 6-month no risk guarantee. You can get all your money back, and then if you don't double your money in a year on one of the positions, we'll give you another year for free. So the onus is on us. And if there's something you can't figure out, just hit Jimmy up. Right? He's the director of member services, and then we'll get you an answer right away, or we'll point you to somebody who can figure it out for you.
Hey, the second to last deal that was out last week, we're already up 80%. So that a pick that doubles for us. And I don't mean to sound braggadocious or not humble. I'm thankful for it, but we vet these deals pretty rigorously, y'all. So you'll probably have that double, likely almost right off the bat. In the case of the deal that I'm talking about that we pitched last week, and that, luckily many of you subscribed. Things up 80%. The deal's not even closed yet. The financing's oversubscribed. We raised quite a bit for it. And thankful that it's performing. But again, that's a company that's about to start drilling and following up on a discovery. The main catalyst hasn't happened yet. And it's why I'm so damn excited for March. I am chomping at the bit to celebrate all month long, because I think it's going to be a heck of a 2025. I think March is going to be the kickoff for a lot of major catalysts. And look, I'm ready for it. We've been positioning for years in very aggressive ways, both ourselves, our friends, our family, and our subscriber base for go time. And now I think, it's go time here in March. So
Yep.
hopefully y'all will join us. And if not, we'll tell you about it on this podcast here.
There you go.
That's all I got. Anything else you want to get off your chest, Nick?
No, I think we're going to go into the premium portfolio pick section. Is that right?
Let's get to it. Let's get to it. Thanks for joining, everybody. I am Gerardo Del Real, along with Mr. Nick Hodge. This was the 306 weekly episode of our therapy session that we call Investing in Bizarro World. Have a good one out there, everybody.
See ya.